So let's start with talking about some of the latest market data. We're going to talk about new rent report data. We're going to talk about home sales, and we're going to do a quick talk about interest rates just to get you updated as to where we are. So the new rent report data from Zillow talks about really just incredible movement forward in rents in single family. And if you've been listening to me, you know I'm not a huge fan of multifamily, certainly not large multifamily. And the resiliency, the consistency, and the insulation of single family is just so important to why we use that for our model. Since the pandemic, single family rents have increased 41%, whereas multifamily rents have increased just 26.5%. So as you can see, no matter where you're investing, you're generally in a good place, but there's no doubt that single family is the way to go. And in reality, if you were to look at the actual charting, you would see that multifamily has come down more recently. Most of that gain was early on, whereas single family has continued to rise and been really strong and stable. So just another reason why we love single family. And talking about strong growth, DFW has absolutely dominated Texas in million-dollar home sales. These aren't obviously the homes that we recommend investing in, but this just shows you the strong correlation between million-dollar home sales and a market's real estate strength and the amount of money, jobs, and income flowing into an area. So this chart is based on brand new statistics that show DFW is literally Texas's preferred market for luxury home buyers. The total amount of million-dollar plus homes sold was over 12,800, and the total value of the homes sold were 21.4 billion. That's a 10% increase over last year and much higher than the national average. So just absolutely incredible. And of course, interest rates, we still have a positive outlook. The governor really sees potential for multiple interest rate cuts in 2025. He went out and spoke just a couple of days ago because the market was really digesting the fact that they didn't do a cut this month to mean that, well, maybe they're not going to be doing cuts. And of course, those of us that are monitoring the markets absolutely believe that they will. And we also believe there's going to be immense pressure and opportunity from the White House to make sure that happens. And if not, find an alternative way to make it happen. So he came out and clarified and really made clear that the economic data that we're seeing with some strengthening is normal for this time of year. They believe we're still making massive progress on inflation. And if they have new numbers that come out showing inflation is down, they will be reducing interest rates. So exactly what we expected. We've been pretty vocal. We didn't think there was going to be a cut in January. So everything is moving forward exactly as we expected. Leaders in the market and those that are pricing this out are expecting several interest rate cuts this year. The market implied odds for a May move are rising, but June still appears to be the best bet for the next cut. And expectations for another reduction by end of the year climbed significantly after Waller's statement. So we'll be keeping you up to date on that, and we are certainly watching that closely.